Oh yes, guys, we're back. What's happening? We have DCA live yet again with this fantastic gentleman. Let me pump the beat a bit also. We'll be discussing about Bitcoin price, consolidation. How long will we have this consolidation? It's crazy. The market is so boring. Many people checking out because of this crab market. Then we have the yield mooning. We have government shutdown potentially in the US. We have many other things to discuss. So how are you doing, gentlemen? CTO Larson, James. Let's start with CTO. How is your Monday morning?
Finally Monday. Best day of the week. We have DCA.
And James, what about you?
Well, the average human being hates Monday, but I love that we love it, so it's great. It's good. A new week.
Yeah.
And you know, the great thing about this week is we're closer to the end of Rectember, which is great. So what, 5 more days? Go.
Yeah, and looking at the monthly returns, October has been quite bullish, so we will get back to that, but I would like to start with number one, welcoming all of you who are watching live. Smash up the like, subscribe to the channel, subscribe to CTO Larson and Invest Answers as well. And let's start by speaking about the price of Bitcoin. I mean, that's the number one thing that most people are watching right now and always. And there hasn't been too much. We are at 26, we were at 26 a month ago, and it's all sideways. So maybe you, CTO, want to bring up, pull up the chart, pull up the Larson line. What are we seeing?
Absolutely. It's because there's one thing that's actually happening right now, like 10 minutes ago, and that is this dollar strength index. Because when we're talking about Bitcoin, it's Bitcoin versus the dollar. So if the dollar gets weaker or stronger, that kind of affects the Bitcoin price because that's the denominator. And this 106 level that seems to maybe it's breaking out now, we don't know yet, or if it will reject. That's very significant because if that breaks out and we have breakouts in these yields that happened last week in the 2-year yield, we have breakout in the 10-year yield. And if the dollar strength index breaks out, if it does that, we don't know yet, but it's just at the edge right now. It's 106.008. The macro whales are battling. That could give us a clue here for in which direction this one could break out. Because now we're in this boring range, and it feels like it's forever and ever, and we will never get out, but we will get out. And we will get either out on the downside or we will get out on the upside. And the only clues we have really are these macro factors. So that's why it's important to follow that. And but we are still in the range. Nothing has changed from last week. In fact, nothing has really changed for 6 months in the Bitcoin price. That's why this is so difficult. We're still in the same tight range as we were 6 months ago.
But so according to your dollar strength index macro indicator, it would lean more bearish if you just look exclusively at that. Exactly. And then, of course, we have all kinds of bullish indicators also, but that in particular would be a bearish one.
If it breaks out. Exactly. If tomorrow, if this one really breaks out, so it looks like this tomorrow, that would probably put some pressure on speculative assets like Bitcoin. But we don't know yet if it will break out. It rejected one time here in December, then again here in March, then the next time it didn't reach, but now it's on that level again. And it hasn't broken out yet. Look, now it's 105.994 because everyone can identify this resistance area. So now those people trading the dollar versus the euro, they are battling here, buying, selling, and they're very excited right now. We think it's maybe not so exciting being used to altcoin prices, but this is probably an exciting time for Forex traders.
James, what is your view on this? Also, we have to remember the Fed announcement from last week and how that affects this DXY chart. How do you read this chart, and what do you make out of this?
We got to look at, so my background is currencies, more than 3 decades ago, but you got to look at the factors that make up the pie. First of all, people are chasing yield The yield is higher on the dollar than other currencies, therefore it makes it more popular. And the other thing is, the other currencies, many of them are complete turds. The US dollar is a turd, but there are worse ones. I will not name any names, but you can look at dollar versus currency X chart, and you'll see exactly the problems there. So you remember, this is, 6 or 7 shirts in the laundry. This is the cleanest one, but they're all dirty, and they're all going to go down over time. And that's why sometimes I think if we look at this chart, yes, it does have a correlation. Obviously, if the dollar goes up, it shows you the dollar is more popular than other types of risk assets like gold and Bitcoin. But at the same time, it doesn't really matter at the end of the day. The Bitcoin is kind of a supply and demand issue. Bitcoin was built for crises, and we're coming into a crisis. So, and also the Dixie was at 114.8, if I recall, a year ago. So we've been in this territory before. So don't freak out, ladies and gentlemen, is my word of advice. You're measuring something against a turd. It's like measuring Bitcoin against a meme coin, if that makes any sense.
And so looking at the macro
garbage
and
coin, the garbage fiat gets slightly less garbage. That's what we're saying.
Yes.
Right.
Yeah, and so looking at the overall macro and the recession risk, maybe we are already in the recession. Looking at the bond yield curve inversion, where 2-year has inverted 10-year, and it's been the longest. Now I read that we've had the longest time where the 2-year has a larger yield than the 10-year. So what do you guys make out of this in connection to a recession, soft landing, hard landing, and how will the role of Bitcoin increase or decrease within the financial arena as we enter potentially tougher times within the world economy?
Yeah, I have quite strong picture on this. I think we have to separate the short term and the long term here, because short term, Bitcoin does behave as a speculative asset. So if the risk on appetite goes down, Bitcoin tends to dump, right? And if risk on comes back, liquidity flows into the market, what to speculate on, should we buy stocks or so on, a lot of that money goes to Bitcoin, and Bitcoin price runs up. But that's in the short term. If we look long term, I think it can absolutely fill this function of digital gold, a strong commodity that you can run to when the fiat system is kind of cracking a little bit. But I think those are long-term movements. We shouldn't expect people to see, euro is crashing today, so Bitcoin should go up. I don't think it happens on that time scale. It happens on longer time scale. What do you think, James?
Yeah, there's a couple of things, and I'm going to pull up a chart because it'll explain it better, what I'm going to say. I'm going to turn my face into a chart, if that's okay, Ivan. It's easier for me to share that way.
Yep, there you go.
So first of all, as the bond yields go up, they absolutely smash bonds. And TLT is kind of like a bond index. And you can see here, the TLT is back at levels that are the global financial crisis level, which is extremely bad. And this is breaking banks. This is breaking any holders of bonds. This is breaking governments. It is really, really bad. But somehow they're covering it up with things like the bank lending program within the US and other things. The other thing to look at, because of the high yields, this is probably a very, very important chart here. This is the 10-year yield in the US is now higher than the world equity yield. So 10-year treasury yields should be kind of a safe place to go to park money, very low risk, etc. For that to be paying more than world equities means the world is broken. Something's got to break. And you can see last time this happened, we had the global financial crisis. So again, all roads lead to that kind of global financial crisis situation. So what this means, basically, either world equities have to start generating a lot more return, or world yields need to come down. And we have come from that zero interest rate environment for 15 years. That will have to come back because debts are exploding all over the world. It's like money printing is going like crazy. I can't remember the numbers. The US is printing 18 billion a day in new debt. $18 billion a day in new debt. It's like you putting $250 in your credit card every day. and not stopping.
Yeah.
So
And I don't know if you guys covered it last week when I was away, but we have approximately $7 trillion in treasuries expiring. Basically, that they need to create new ones in order to pay off the old ones, and the new ones will be with the new higher interest rate. And I don't know if we've ever been in this kind of situation where the difference between the old interest rate and the new one, when this debt rolls over and they have to replenish it, has been this high. But that's definitely a big factor, and the government will have to tell the Fed to relax, I guess, or the government is fully wrecked.
you know, people are kind of crazy, like, why are we not talking about Bitcoin? This is talking about Bitcoin. This is hardness we're talking about, and how, because there's so much debt, there'll be so much debasement, and the purchasing power of whatever currency you're in is going to fall very quickly over time. And Ivan, you are half correct.
Yes.
But the story is actually worse. Over the next 2 years, 16.3 trillion will roll into a 5% coupon. Okay. Most of that 16 trillion is at under 2%, 1.5%, 1% type of things. So the current interest on debt is now $1 trillion. That's going to go to 1.4, 1.6, and then eventually to 2 trillion. And tax revenues are tanking. GDP is kind of a fake number anyway, just like inflation numbers. It is really, we knew this was coming. But if you asked me 2 years ago, would this be happening now at this rate? I'd say, no. That's maybe 2028. But it's all coming to the fore right now, really fast, and risk happens fast. So it's incredible to see all the stuff that's happening around the world. And it makes me scratch my head. Why would they do this? It doesn't make sense. Anyway, back to you guys.
Yeah. It doesn't, and I liked what you said about the speed, because this is happening very fast. I'm trying to pull up this chart about that shows the U.S. government debt, and that one is just through the roof. Yeah, let me share this picture. There are many pictures, but there has been circulating a few on Twitter lately. Let's see, present, share screen. Let's see, this one. Bam, there we go. I mean, it is just up and up and up. And now it's probably even bigger because this chart is from a few years ago. But as you can see, it's exponential. And all new presidents, they never stop it. They make it go faster. And another reason why it will go even faster now is the higher interest rates, because to pay off the old debt, they will have to create new one, and that is higher interest rates. So it becomes this spiral, and the speed is the most important element here. You look here, it's just a few years, and you see how fast it goes. So the interest rates right now, like you said, James, they're paying, what is it? Is it $1 trillion now per year? And defense budget
trillion.
is like
Yes.
900, and the defense budget is like 700. Exactly. So what kind of interest do you think the US government will be paying in 2, 3, let's say even 5 years? Because it's not 10% more, it's likely double. It's likely maybe even triple. I mean, who the hell knows? But how do you think that interest rate will grow on the US government?
Blended rate will
forward?
be at least 3%. At least 3% blended rate. So you take 3% of what will soon be $34 trillion. You do the math, and then it's going to go to 3.5%, 4%. That's why, they say higher for longer, but every time they stay higher for longer, they're causing a bigger deficit and a bigger problem. This is what I can't figure out. Now, imagine, we've said many times here, imagine the US was a company. What would the stock price be? 0. And CTO, you mentioned a tweet last week. If the US government was your friend, would you lend them money?
Exactly. If you compare the revenue, which is like the tax income, with this debt, it's not a funny picture. And that part isn't growing in the same way. So it's not looking good. Yeah, the company would be bankrupt at this point.
Yeah.
And no real ability to come out of it. So I guess, And that's what's so interesting, because also in these periods, commodities, if looking in the past, have generally done quite well. In this people are scared, often stocks kind of go down, but commodities tend to go up. And what if Bitcoin is like the new gold, actually? If this is the period where Bitcoin becomes the modern gold, then it could potentially perform well over medium term. At least it's possible, right? If it becomes this if it fulfills the vision that it was created for, this would be the time to do that. We haven't had this period since Bitcoin was created, so we don't know for sure. And but I think it's at least possible. It's important to not get confused, because in the short term, on day-to-day basis, it's not like that. It's the other way around. The worse it gets, then Bitcoin dumps, because people get scared, and it's a speculative risk on assets. So if something bad happens with the US economy, everything dumps, stock dumps, and then Bitcoin dumps also. But that maybe we should separate from the medium long-term picture.
Yeah, and I have a question to you guys. So normally when we see the bond yield go up, we say that it's bearish for risk on assets because you can get $3 and it's low risk, like zero free rate, this and that. But the thing is, normally when something is high yield, it means that it's very risky. When you look at high yield stocks, high yield real estate, everyone knows it's basically crap when you hear high yield. And then when you look at high yield bonds, you have Argentina, Bahrain, all of these different countries. So at what point do you think that the market will shift its thinking from when the US yield goes up, bond yield goes up? Now everyone's thinking, oh, that's perfect, it's free money. Let's put even more money into money markets. When will that shift towards being, it's actually very bad? It means that the world is losing faith and trust, and it's probably just a low value, low quality asset. Will we see it within the coming 5 years, 10 years? How quick can it go, if it will ever happen? What do you guys think?
Let's see if I can share one screen.
A fun chart would be the Argentinian peso, dollar, Bitcoin. And then you'll see
Bitcoin, it's all-time high.
you see the depreciation of the actual currency in real terms against a hard asset. And then when you think, I'm getting 26% of my pesos, but they're depreciating by 100% per year, you're actually losing 74%. And that's the crazy thing. Even with the dollar, you're getting 5%, but it's debasing by 10 or 14%. That's the crazy world we live in.
Yeah, I mean, there's some parts we can learn from the history of the previous two crises, and because this is a crisis that's happening right now, and we've had a couple in the past. One was the dot-com crash around year 2000. The second one was the financial crisis 2007 to the bottom 2009. So the chart we're looking at here, that's S&P 500. The orange line is the 2-year yield. And while it seems like these shouldn't follow each other, right? Now everyone's hoping for that the Fed should start cutting rates, and then everything is supposed to pump, right? That's the media on Twitter. We're hoping like, okay, when Fed starts cutting, money printer is back on, liquidity flows in, and stock market and Bitcoin goes up. But that's actually not what happened the previous two times. It's the other way around. It's when they started cutting rates, when the 2-year yield started dropping. That was actually the top. And then from there, we had this huge dot-com crash. And then that happened again in the financial crisis. It was when the yield started being cut shortly after the stock market dumped. And these are not small movements. On S&P 500, this is 60% drop, and it was even more on Nasdaq. I think it was a 75%, 74% on Nasdaq. So it's kind of a little bit of a buy the rumor, sell the news event. And of course, it also makes sense from a macroeconomic perspective. When the businesses start going worse, when the companies start going worse, the Fed backs up and they start cutting rates and so on. But it's important to have this in mind, that it might be the same again. Who knows? It's maybe the next year until they actually start cutting that things still run up on speculation, if these should be any clues from the past. And then when they start cutting, then it's already over. Then it starts dumping instead. What do you guys think about these? What do you think, James?
Well, that's history. It's a different time, so you cannot compare the dot-com bust to today because the valuations are quite reasonable today. The problem with .com was kind of like the GFC. Each crisis had a different reason for having a problem, but this time is different. So .com, we had crazy valuations of companies that had no logical business model. They weren't at all fungible, and they were trading at 1,000 PE, or had no PE whatsoever. And that's what everything kind of came down to earth real fast because the valuations were crazy. And then GFC was due to crazy exotic mortgages and real estate and cross leverage, like what happened in crypto in 2021, 2022. But this time, I think what's interesting about the world we live in today, we're on the verge of multiple S-curves colliding and different types of disruption. AI is huge. The world has a big problem with GDP growth, but AI can fix that. That's the big difference, and it already is having an impact. And S&P valuations, I think the average PE is about 19 right now for the whole market, so it's not crazy overvalued. But there are companies driving the returns of the stock market, and they are the ones that people believe are crazily overvalued, but they're not when you look at the future earnings potential. So again, this time is a little bit different. Then we have crypto as well, which is a very exciting disruption force coming down the path. So it's all good, but sometimes looking back at history can be helpful, but sometimes, again, kind of like the Dixie, you got to look at what's in the cake and what made it happen.
Absolutely,
came out
absolutely.
that way. You know?
Because when looking at it from a historical perspective, it's kind of a little bit scary. These have followed each other, at least if we kind of ignore the COVID dip in the stock market and then the stimulus that followed where interest rates were zero. Then it kind of just caught up here. So would it turn down there when the interest rates turns down? If just looking at the chart, that's a fear. But then, as you say, the situation is different now, and it might not follow the same pattern. I think an important, now when talking about this, and we're kind of trying to get clues for Bitcoin based on other charts, based on Dixie, based on stock market, based on 2-year yield, 10-year yield, and so on and so forth. There is a good principle, and that is actually, if analyzing charts, should primarily analyzing them from their own merit. So rather than trying to say that this chart should go up now because this happened, it's maybe easier to just look and see what happens. And so far, Bitcoin hasn't moved. It hasn't moved because of Dixie. It hasn't moved because of the yield. It hasn't moved because of the stock market. It hasn't moved full stop. And actually, that's all we need to know. It hasn't crashed because of all these reasons.
Yeah, and I'll take a counterpoint to that. Those things do have an impact, but the biggest driver of movement is money flow. So there's no money flowing into Bitcoin. People, summer slump, they were afraid. It's like, it's not going to go anywhere for summer. They check out. September is Rectember. They know things typically don't turn out well. And then there was so much fear about FTX selling and Mt. Gox selling. Mt. Gox, by the way, postponed their release of crypto from October 2023 to October 2024. So that headwind is now gone as well from the crypto world too, which is a very important point. So I think it's all about money, how much money is coming into the system and how much supply and demand there is. I think that will drive it up. And then we're approaching October, and people are like sheep sometimes. They follow the others. So they follow price action. Once this thing starts to pump, people say, oh my God, halving is 180 days away. That's half a year. It's time to go. It's time to build a position. And then you have all of the institutions knowing that's going to happen. They have to build a position too. So I think money flow is a huge part of it, and not necessarily all the other factors that will drive it up.
Yeah. So if you open that chart again with the interest rate, with the yield and the S&P, I think it's quite interesting that in the past, we've seen all kinds of correlation. Sometimes, they both go up. Sometimes stocks go up, yield goes down. So we've seen all kinds of different correlations. But if you look at how it is right now, let's see. There you go. I mean,
Yeah.
as soon as they started to increase the interest rate and as soon as the yield started to go up, the stock market paused and started to dump, like right now, during the last, if you look at the last peak. And so one reason I'm thinking it could be because, I mean, not this zoom out. Like right now in this current cycle that peaked out there at the end of 2021, S&P topped out right when the yield started to go up. And so I think the reason is because during the last 10 years, many countries, including the US, had almost zero interest rates. In Sweden, we also had zero. Many countries had even negative interest rate. So this past decade has been fueled by low interest rates. I don't know if that can be said about the last, those other examples that we looked at with the .com and great financial crisis, but this one in particular, the last decade or so, has been fueled by that. So that's how I'm interpreting it, that now the paradigm has shifted, and right when they start to increase, the stock market started to go down. So let's see if this logic holds, and if in this new paradigm, if they start decreasing interest rates, yields start to go down, then risk assets will continue. But looking historically, it is a bit hard to see like super nice 100% correlation. As I mean, we see sometimes they both go up, sometimes they don't follow each other. But that's a good chart for sure, and you also see how
it's a
fast
good reminder
increase.
that it is a complex world. It is a complex world, and these kind of discussions is very valuable, because maybe it isn't the same as it was last time, because the world has changed in many ways.
Yeah, there's one other thing to remember too. We were close to, I think it was less than 10% away from all-time high after the biggest series of rate hikes in the history of the world. So the stock market, you can see here from the chart, didn't get smashed that much. It did take a dip, but it's not catastrophic by no stretch. But that's also because the stock market has to go up because the underlying denominator is debasing all the time. That's the other simple piece of math that you got to take into account.
Oh, absolutely. I mean, that's if we zoom out, if we really zoom out, and let me remove this one, and we go to monthly candles. And bear with me 1 second. If we go to the actual S&P 500 index.
Yeah, we were 4.3% away from the all-time high back in August. So that's a big factor.
Exactly. So if you see on the log chart for basically 100 years, it's a straight line. It's a straight line on the log chart, and all the indices look the same. Dow Jones from 1897, it's a straight line. So how can it be? How can this go from 32 to 32,000? This is a straight line, 1000x Dow Jones. And the answer is, of course, that the dollar gets less worth. So this can continue forever. Absolutely. It can continue going up in a straight line on the log chart, which means that it keeps doubling at the same rate forever, because the denominator, it gets less worth.
Exactly. Okay, guys, let's switch topics. Or do we have something more to add on this dollar debasement, yield, price? If not, let's move on to. Let's talk crypto. Let's talk about the options. This is something that each and every, especially in the bear markets. I remember in the last bear market, we've been discussing options a lot, because this is like the main source of volatility, or at least when you read the media. And so what we're looking at is 117,000 Bitcoin options expiring on Friday. And historically, the reason why people have been paying attention is because there's always discussions about manipulation. Is it someone manipulating when options expire in order to get some desired price? So what do you guys make of it? Do you think that options are a cause of volatility? And is this a big factor that we should be paying attention to, or is it a minor factor and we're just trying to invent a reason for this market to go somewhere and not just sideways?
There was a funny thing. I think, was it a year ago? There was someone on Twitter, now I can't remember, who was like into astrology, like moon phases and something like that.
Right.
Then she posted this chart over like 12 months. Here is the moon phases, and here is the price of Bitcoin. And no one can deny that there is a correlation here. And I saw a lot of people discussing how is it possible the moon phase is actually explaining the price of Bitcoin. But I do not really believe in that. I think there's another explanation, and that is that the moon changes roughly once a month. And there's also options expiry at the end of each month. And I think it's those options expiry and not the moon that explained those undeniable patterns in the chart, because there was a pattern. So I do think there's an element of manipulation, but it's very short-lived and it doesn't really have any relevance over the longer period. But volatility can definitely increase exactly at the expiry, because there's one person who has an incentive if price goes up, and there's another person who has an incentive if price go down, and maybe they try to run it at the same time and price goes up first and the next hour it goes down, and so on. They try to liquidate each other and staying alive and so on. So there can be this kind of price action happening right before that, but then the next day it zeroes out. It doesn't really stick. James, you have more experience here.
Yeah, so the Bitcoin one I'm not that worried about, because I think the max pain's at 26.5 and we're pretty close to that 26.2 right now. So that's not a big issue. The Ethereum one at 1650 is more of a concern, because just like what you said, people will want to get Ethereum either if they are short, they want to push it lower, but I don't think it's going much lower than where it is right now. But we'll see. But net, I think there will be that short-term volatility a few hours before expiration. But based on the data, the markets have been stable. The distribution is pretty stable as well. And I don't think it's going to result in any big volatility this Friday at all. Not concerned.
Yeah,
and a lot of people, you got to again go behind the scenes, because why did people enter these positions? Because they thought September would be Rectember. And Bitcoin's been super stable. It caught everybody by surprise. It's actually up 2 or 3% for the month, if I'm not mistaken. And that is not what history would have told you would happen in September. This is why they're kind of caught out.
Right. Also, we do see Mt. Gox trustee finally deciding on a deadline, or actually changing it. Let's see if this is the final one. But this is a ghost that keeps haunting us for 10 plus years. When are the coins going to be distributed? And right now the deadline is set to October 31st, 2024. So at least 1 year we have without this FUD, although it will return probably next summer. And I think we've been discussing it in the past as well, where I remember talking about the fact that I don't remember any time in Bitcoin history where this selling of coins from an exchange actually caused the price to dump. We speak a lot about this news, but do you think it will matter, or do you think that it won't? Because there's always someone dumping, some kind of trustee liquidator somewhere ready to dump on the market. What do you guys think?
Well, I was happy to see this yesterday, and it just took away another piece of FUD from the market. So everybody's always worried about the overhang of a dump, and therefore they don't enter the market, or they sell to position, hoping that the price will fall down further. But this Mt. Gox cloud has been hanging over our heads for 10 years now. And after such a long time, it's like, who cares anymore? And remember, in October, or call it November 1st, 2024, we're going to be more than 6 months into the new halving, and price will be a lot higher, I'm pretty certain. So I think also the market will be more mature. The institutions will be here. I'm 95% certain the spot Bitcoin ETF will be around. So if anybody wants to sell, there'll be more than enough capacity to gobble it up. So again, another nothing burger. I believe. But it's good news for the space right now. A lot of people were fearful for October because of this overhang. There is another overhang too, and that is the US government. I think they have about 42,000 Bitcoin that they need to dump before the year end. But again, I'm sure the government will work with some rich group or maybe with BlackRock or whatever, saying, hey, I got a bag of Bitcoin. You want to buy it cheap? And they'll say, yeah. So it won't even affect the markets. And that's what happens with big bags. It goes OTC.
CTO, anything to add on Mt. Gox? You're scared? You're not scared?
Since the day I got interested in crypto, the Mt. Gox dumping has always been between 6 and 12 months away. And I felt that a year ago or something, or was it 2 years ago, it was closer. It was like a month away only and so on. But that day never comes. But then perhaps it comes one day. So we'll see. I think it's not really
I mean, it's like Lightning Network adoption. I feel exactly the same about Lightning Network adoption. It's always like 1 year or 15 months away. Just like in 2017, it was also just around the corner.
Exactly. Also, like we talked about, I think a year ago when it was last time, not all of those people receiving those Bitcoin will immediately go and sell them. So
I think there's also a bigger story behind the scenes, and I don't know if you have been looking at it, but Tether, they're stacking Bitcoin. They ultimately want to have Bitcoin as a big part of their treasury because they're smart enough to know Bitcoin's going to go up over time, where, you might get 5% on treasuries, but you're going to get a lot more than 5% holding Bitcoin over time. But they got into this very convoluted relationship with some Irish bar to get H100 NVIDIA chips to sell to a miner that's going to pivot to AI mining, etc. I think Tether came out and said that they were not explicitly going to print Tether to buy Bitcoin. I think they said Tether will not issue tokens for consideration consisting of the digital tokens, for example, Bitcoin. Only money will be accepted upon issuance. Now, imagine being in a world where you have a $50 billion asset and you could just add another billion and then use that Tether to buy Bitcoin directly. It's amazing how the Wild West of crypto works. But for them to come out and explicitly say that is kind of interesting too. Have you guys been tracking that story? Because I think that's the big story this week.
Yeah, no, not really. I'll check it up with the Tether aspect. Another thing that we have is this shutdown of the government, and it happens also every year, I guess. And this time around, I feel that crypto is a bit more affected, maybe because Gary Gensler said that the SEC would struggle in such a scenario, which makes sense as they're part of the government budget. So what do you guys think? So right now we have 73% chance, or at least on this market here, of government shutdown on October 2nd. So that's within a week. Have we seen the markets react in some way in the past? Some historical correlations that we can look at in order to see what's going to happen potentially.
Exactly. Well, you remember the debt ceiling for a few months ago? Same thing.
Yes.
It's jockeying between the left and the right. It's like the right wants to be, we're very tight with money. We want to control costs, etc. And the left want to have more bills for crazy things. I won't even go into the type of stuff they waste money on. But I think, as usual, they'll fix it last minute because nothing will make a government more unpopular than not paying the federal employees. These are people that work in parks, that are people that work in maybe fire stations and military and stuff like that. So again, they'll resolve it. Funds run out. But remember, I think I tweeted something about this last week as well, about the debt ceiling. They put the debt ceiling on pause out to 2025, so they can spend as much money as they want for the next 2 years. There's no cap on the debt ceiling, and that's why it's shooting like north of 33 trillion, 18 billion spend a day. It's crazy. They'll do the same thing here. The markets are clever enough to know history and what happens, and it'll be resolved last minute. There'll be a little bit of horse trading in between the different parties, and that's it. The guy, I think McCarthy, wants to come out as a hero because last time everybody says he folded to the left party. He was too weak in negotiations. Now he wants to come out stronger, but we'll see what happens. There's another guy called Mitch McConnell too, who every time he gets in front of a camera, he can't even talk. He just freezes. But these are the people.
That guy. I know.
Yeah, it's a nothing burger. The markets won't care.
Yeah, you got to be 80 plus years to be in the government. So I know them very well. But 10 years ago or so, I do remember that they shut down for a week or something. Do you guys remember? Was it Obama? What happened there?
Yes.
They couldn't. Why didn't they? What was special about that? If you remember,
it was just last minute. And what it means is, and people have been through this so many times, they know what happens. It's like, okay, there's no money in the kitty to pay federal workers and federal programs. Everything just gets paused, but they still accrue their salary, and people kind of know that they're still going to get paid. They may not get the paycheck hitting in that particular week, but then it'll be resolved afterwards. So it's just about holding knives to people's throats to make them negotiate better. That's just the whole game here. And it's pathetic that there was so much consternation over the debt ceiling thing. And then if you look at mainstream media, if you go to, say, the Wall Street Journal or Barron's or any of these newspapers this morning about the debt ceiling or the government shutdown, they don't even mention it. The only people that mention it are CNN because they love drama. And that just shows you how significant it is, you know.
All right, moving on, guys. I will pump the beat a bit here because we're entering James' favorite topic, favorite blockchain, and coin, Solana. And Solana is expanding to EVM. So, or actually, Ethereum L2s expand to Solana Virtual Machine, SVM, because now we have Eclipse, which is an L2 on ETH that is running Solana Virtual Machine, and will be using ETH for security. So this is an interesting technical step where the actual execution environment is not that important. You can have SVM, EVM, you can connect all kinds of execution environments with ZK rollups and other rollup technology that we have within the ETH ecosystem. And personally, I think it's quite interesting for Solana devs, because now if you learn the Solana tech stack, you have more opportunity, you have more places to use it, which should add more network effect, more tools, more devs, more libraries, things like that. But what do you guys think? Have you been following this Eclipse news that now you can program Solana, but it runs as a layer 2 on ETH?
Yes, I have followed it, and I have something that I really want to share, because this interoperability and kind of running the systems across is something that's very warm to my heart. It was actually, I was responsible for integrating this mobile data system across the vendors when now the 5G networks we have now, when that was new, it was in the 2G space. And then it's different parts of the network, just like crypto. So we had like core network, radio network, subscriber database, and so on. And then we integrate that across the vendors. So I was working at Ericsson. I go down to Finland to talk with Nokia to integrate with their different systems. And then it's like in Finland, the Nokia guys sitting there quiet. I'm talking 20 minutes. And then the Nokia Finnish guy says that we agree. And then the meeting is over. I fly home. And then I come to Alcatel, France, so the French guy, and he talked the whole time, and he's throwing the papers in the table and storms out the room, comes back, and we argue and so on. And then I go to Germany, and it's like the German engineers, right, have come to the meeting with these thick, detailed reports. And we're integrating with Siemens. And despite our personality differences, we worked together and integrated all these different vendors' products so that they worked together. And that's what's called interoperability. And that seems a little bit counterintuitive. Why would you do that? Especially if you're the biggest dominating player. Why let someone else in? And because you do give up a part of your pie. And just like maybe Solana give up a little bit of the pie here, because suddenly you can run this Solana smart contract that they've written for Solana Virtual Machine on Ethereum. Why would they do that? And then the vice versa is also possible. Why do you do that? You do give up a part of your pie. You do it because you have the idea that the total pie will be bigger. So even if our slice gets smaller, the total pie gets much bigger. And for the mobile system, that was true. This went then from like a niche idea to the biggest technology of all time, with 8 billion paying subscriptions, and that would never have happened if each and every one built their own little thing. If like the Solana people, the telecom sit in one corner and build only for themselves, the Ethereum people sit in another corner and build for themselves, and then we have like 10 or like in the case of crypto, hundreds of these people. If integrating this together and building this network effect, that's how the pie can become 10 times bigger, 100 times bigger, 1,000 times bigger, and then everyone gets more cake, even if their pie gets smaller. So I think it's exactly this idea. And we have this principle of reciprocity that you try to, like, from an ethical perspective, you do it in both directions. So you can run Solana virtual machine on Ethereum. You can run Solana. You can run Solid code on Solana. You can run Solidity on Solana, and you kind of do it in with reciprocity in mind, and that's what really can, I think, send this industry into something much bigger than what we have today. So I'm very happy to see this, and I think it's key for the whole industry. Sorry for ranting, but I think it's important.
Yeah, I think well, I have been looking at a lot. What I was most interested in, I've been following the story very deeply because I think it's fascinating. You know, number one, the question for you technologists is what happens to the layer twos if you have a better, cheaper, faster chain operating like a layer two already? That's scary. And number two, people are afraid that it'll impact the price of Sol. It won't. Sol price is based on adoption and transaction fees. But the third part is kind of interesting because we have all of this stuff happening at the same time. We have Neon EVM that went live in July. So basically, the development enables Ethereum-based applications to operate on Solana, the other way around. Solang, which is the Solana Labs unveiled their Hyperledger Solang, the new compiler, enables developers to build on the Solana network using Solidity. This is kind of the stuff you were hinting at, Ivan. And then Eclipse, like we just discussed. These three things are really enabling kind of cross-chain capabilities. Now, in the past, I know things like bridges are very, very dangerous, but with the security of Ethereum combined with the security of Solana, is there any exposure here? And is all of this stuff being built too fast? And what do you think of those 3 points I just mentioned from a technology standpoint?
Yeah, I mean, when it comes to the bridges, I mean, they're not necessarily secured by the consensus. So you can have bridges getting hacked anyway, like we see on ETH all the time. And hopefully it's going to be less now with ZK tech being used for bridging. And then sometimes I also wonder if people just launch something to get some attention. I mean, if you can do an SVM as layer 2, you will get some articles. And there is an inherent incentive to do so, just like the other way around. You do EVM on Solana, you fill some kind of niche that no one has filled before. So you get a coin, it gets evaluation, you get a project going. So I think a big part of all of these different solutions is that. And then some of them will take it step further and build an actual community and do something with it. But before we see, the easy step is to just launch an L2. The hard step is to get all the ecosystem partners, get a stable coin launched, get the bridges connected, get layer 0 or Axelar to do cross-chain messaging, to get oracles working, things like that. That is when I feel that that is when I feel that the chain has done enough work to be valuable, to do something, because if you don't have oracles, it's difficult to build anything. So I think this is a good announcement, and now their journey is just beginning, and they'll have to prove themselves if they have some substance or if it's mainly for the article. But that will always happen. Whenever you see a new chain, there are now many niches. You can do SVM, EVM layer 2, and get promotion based on that. But yeah, let's follow how this evolves. Any more comments from you guys on the Solana L2?
I think the big question I'm trying to get to the heart of is what happens to the existing L2s that are very expensive and slow, especially around things like finality, and expensive around things like fees. Could this disrupt those, especially the new ones like the Arbitrum and the Optimism, etc., maybe even Matic down the line? Do you think they are in danger from this?
Only if this blockchain Eclipse, if they start getting, for example, Chainlink deployed or Axelar deployed, because Axelar and both Chainlink, Axelar, and Layer 0, they do this cross-chain messaging so that you can share liquidity between chains. So if they start getting this ecosystem around their chain built up, and DEXs start to migrate and projects start to migrate, then absolutely. So there is definitely a chance, but the hard thing is getting all of the players on board, because now it doesn't matter which tech you have. You now, there are so many things that need to work with people, because people need stablecoin, people need a bridge in order to use the chain. So I feel that is the hard part, and the scalability and the number of transactions per second, that's a bit secondary, because many of them are fast and many of them have empty block space. We have so much empty block space in this industry. So this means that the cost and speed is slightly secondary, but yeah, the network effect, momentum, that's what will decide, I think.
Again, as I always say, the best, cheapest, fastest, most secure will get all the business down the line, whatever that may be. Would you agree? I'd take a telco network, CTO. Same analogy here.
I think it's like, I feel that in many cases it's not either or. It has to be everything. You have to do the best technology, and you have to have the best adoption, and you have to have the best business development, and you have to do all those things. If one does one thing the best and the other one does something else the best, I think the outcome is not so deterministic. And I really try to look at all these aspects, and that really, I feel, narrows it down, because there's now we're talking about Solana and Ethereum. I think they are both great projects. I think they have great technology, they have adoption, they're doing great. But there's a lot of other blockchains also where we can argue all day if the technology is good or not, but fact is that they have no usage and they have no adoption, and it's a ghost town. And I think that they probably won't make it, even if they wake up one day and they radically improve their technology. It gets radically better. They might still not be able to turn that negative momentum of the fact that no one's actually using it. They might not be able to turn that around. So I think that it's necessary to do both. It's necessary to have great technology that is cheap, cost-effective, fast, scales, and does all the things we need from technology, and kind of gain adoption, gain partners, gain momentum, do all the things that Ivan said. There has to be a good stable coin, there has to be good bridge in and out, or some solution to get money in and out of the chain, and all those things. That's really my take on it.
Good stuff.
Yeah, but one thing to remember, guys, is that block space is plentiful. We have chains that are ghost towns, which are cheap and fast. Like some of the ones we mentioned before, you look at Aptos or Sui, super fast, super cheap, zero. Like there's zero. There's like 400 transactions per day or something. So it's in my mind, because the tech is open source, because everything is open to use, the weight is more towards the ecosystem and building all of these things around the chain, like oracles, bridges, and so on and so forth. And we have 4 minutes remaining. We can go over time also. Let's invite the chat into the discussion. Welcome everyone watching live. Time for some Q&A, and while we're waiting for questions to drop in, do you guys have any other news, CTO and James, that is important to mention before we hand it over to the chat fully?
Yeah, did I mention Michael Saylor bought more Bitcoin? I can't remember. I mentioned it in the chat, but I don't remember if I mentioned it here. And also,
let's see.
One of the things too that's interesting. He bought a big stack at an average cost of 27K, which is good. But a lot of people are asking, okay, what happens in October? I know that was part of your kind of loose agenda, but October returns are pretty spectacular. The average, now, if history repeats, of course, everybody, I just want to mention that. But the average returns for October are, I think, 30.5%. And if you look at the years before the halving, they're even better than that. So 1 year, I think the returns were north of 290% as well. So October is called Uptober for a reason, and it should be pretty positive. Oh, there you are. That's exactly what I'm looking at.
There we have
So
it.
if you can highlight on that chart the years before the halving, like zoom into 2019, 2015, they're really
Let's see.
the key numbers to look at, because that's the analog for this cycle right now.
So this is 20, so we have 10% 2019, then let's see, it's not super aligned. This is 18, 17, 16, then this is 15. There you have it, 30% in 2015. And yeah, let's see how this year turns out. September, like you said, James, has been a bit more bullish, and we still have a few days to go in September, but
Yeah,
it's been flat.
It's the worst month of Bitcoin's life in history ever. And the fact that we're up 2% or something is astounding. And that ties into what you mentioned earlier regarding the options expiry and the max pain. People were banking on a 20K Bitcoin, and that's where you see the bets placed. In September, they're like buying puts and going crazy, but that didn't pan out for them. Well, it's still, we have 5 days left. Anything can happen, and there's some ugliness on the horizon. But again, Bitcoin doesn't care, and even if there is a crisis, Bitcoin loves a crisis too.
Yeah, that really shows the danger of using one chart to kind of predict the price of another one, right? Because many of the macro factors have been there, like the yield broke out and the DXY has gone up, and worries about higher for longer and all those things. And then what has happened with Bitcoin price? Nothing. In fact, it's gone up 2%. So
exactly. You said it so eloquently. It's like every poop storm has happened. Bitcoin has never existed in a macro environment like this, and people said it would never survive. But look what it's doing. It's super strong. Can you imagine when it starts getting tailwinds? Wow, it'll be nuts.
Definitely.
Absolutely. And yeah, I think that's a good way to wrap this up, where so many people, they're so focused on today, and they cannot see that if we even have the smallest tailwind, the effect of that is going to be massive, because we even forgot what it is to have a tailwind. We've never had it since 2021. There is zero tailwind for 2 years, so our brains don't even remember how it is. But as soon as we see the slightest one, we're going to snap to 40K. From there, all the algos are going to snap us to 60, and then the real FOMO will start when we go above all-time high and new price discovery starts. So let's end on that very positive note, which I love, and let's go to the Q&A. Let's see. Something about the treasuries. Do you have this from Heike, your favorite on-chain US Treasury yield project, time to get that yield? Oh, that's interesting. Is there some project that you can buy some coin which is like treasury yield? I haven't seen, but stable coins should start offering that because they are earning their money from the yields, and I haven't seen too many of them, if any. Does any stable coin share the yield? Do you guys know?
I read something. I think it was Brian Armstrong from Coinbase, believed that was one of the top 5 trends for the future, is not having a debasing stablecoin in a dollar, but it's kind of a stablecoin with interest to kind of, and then there's a bunch of startups working on a stablecoin that actually is inflation adjusted, so you don't actually lose your money by holding a fiat. Those are projects coming. I don't know if they're live yet, and I can't remember their names, but there are things in the works around this area.
Because it's a huge disadvantage now with stablecoin. There used to be one advantage, one disadvantage, right? The advantage was the speed and flexibility. You can use the stablecoin to buy whatever coin you like immediately. You don't need to transfer it somewhere. The disadvantage was that there's an element of risk. But now there's 2 disadvantages. There's an element of risk, and you're actually not getting any interest, while if you have the money on the bank, you're getting interest on it. And that didn't matter so much 2 years ago, but now it matters a lot. It's a lot of money. Lost.
Yep, gotta get that printed fiat.
Yeah.
But yeah, I mean, still, with this printing...
It's Circle that collects it, right? So for USDC, it's Circle. For Tether, it's the issuer collects the interest today as revenue, I guess.
Oh yeah, they're making.
I read somewhere that
they're making huge money. Tether, if you take whatever $60 billion, multiply that by 5%, that is a massive, massive profit line straight to the bottom line.
Yeah.
So
Check this, guys. One of the top buyers of US Treasury bills is Tether, according to their CTO. I always find it funny that whenever Tether does something, it's not their like press person, not their marketing. It's always their CTO. It's this Paolo Arduino, who is the CTO, but also the only public person in Tether. But anyway, according to him, Tether is one of the top buyers of US Treasury bills. So they make a lot in that interest. Let's see. The question that will never escape us, that we will never escape. When all-time high? Is it, according to the cycle, if we repeat the past cycle, it should be in 2025. If we're to speculate, degen, dubious speculation, when do you guys think the next one is going to be?
I have a chart.
I'll start by disagreeing then with everyone. I don't think it's only the constant in the code setting the which block that the halving will happen. I think that it will be an effect of macroeconomics, the environment, how much liquidity, like James said before, how much liquidity is flying in the direction of high-risk assets, which are like tech stocks and crypto and speculative stuff. And I think that can keep, well, once it starts flying, it can keep flying much longer than people think. If we look at the previous cycle, after the financial crisis, we had 12 years of straight up every single year. I think it can continue much longer. I think once it starts running, it will run longer than everyone expects. That's what I think.
I have a pretty cool chart I can show you real quick. In answer to that, it's not when the next all-time high, but it is from Titan of Crypto. And he said, never before in history has the halving occurred without Bitcoin reaching the 78.6 Fibonacci retracement level. The first cycle, it reached it 4 months before the halving. Second cycle, 2 months before the halving. And the third cycle, it was 12 months before. So, we're 6.5, 7 months away. I think it is very exciting. And that target is 48,700. Very bullish, but also, if history repeats, we seem to be talking a lot about history, when it works, when it doesn't work. We shall see.
People get FOMO by listening to us. We're the beacon of light in the middle of the bear market. Let's see, more questions. Yeah, I mean, this is something I've read as well, that Tether is making the argument that, we're the biggest buyer, one of the biggest buyers of US Treasuries, so you shouldn't kill us. Have you guys been thinking about this? Like whether Tether is too big to fail, or not too big to fail, but too unnecessary to destroy for the US government? Personally, I don't know if I buy that, because, I mean, if Tether is unbacked, unlicensed, like fully offshore, is that an excuse if you become the biggest US Treasury buyer? I don't know. What do you guys think?
This is like Mt. Gox fund we've been talking about for 8 years. It's a nothing burger. And right now, they've proven that they're making so much money on treasuries, like pulling in 5% on their 70 billion balance. Do the math on it. It's a huge amount, even if they had a hole. So I believe back 2 years ago, maybe they had a 5% hole or something. That was a problem. But now they can patch that in a year easily. And I think their treasury is about 5% Bitcoin. As that goes up, there will be no hole, but there'll be massive surpluses. So it is the whole stablecoin business is an extremely lucrative business if it's done right. And that's why TradFi, like BlackRock, etc., they want to be a piece of it. That's why they're making kind of investments in Circle and other things behind the scenes. It is a absolute money spinner if you can get the business.
I think it's very important that, I mean, for years, it's been this tether fund that USDT is insolvent, and there was this, what was the account called Bitfinex or something, which was one of the most followed accounts on the whole crypto Twitter. Then I think it disappeared, but there's been this. So if there was some fire beneath the smoke, if we say there's no smoke without fire, if there was some issue, some thing that wasn't really backed, perhaps they have now filled it, because as James said, now they've made so much money by luck a little bit that they don't need to pay out any of this interest that they're collecting. Perhaps they've filled it. So I feel less worried about Tether now than ever, I think, since the beginning of crypto. Now they have to do some really criminal mismanagement here and, go and speculate all the way the money that some other people in the industry did. But if they don't do that, if they just had some minor issue and they, work to try to fix it, now that should be fixed, I hope. So I feel less worried about Tether. I don't think it will matter for the US government, though. I think they're too small.
I kind of feel with Tether, like with Celsius, because I remember with Celsius, like something wasn't right, but everyone was like, "Oh, Celsius amazing, we love Celsius, blah blah." And then, like for a while, I also maybe it is all right, maybe. I feel like that with Tether now, where I mean, to me, it's a bit weird. Like, and by the way, I've had Paulo on my channel many years back, but he seems like a nice guy. But I find it weird that CTO is the only public person. Maybe there's a reason. I don't know. If there is any risk that is uncleared, it is that for me. I'm not. I would be lying if I said that. Yeah, I'm 0% worried. But we've had the same thing in the last bear market also. It was even worse in the last bear market because some Tether pairs were trading at a premium. Like Bitcoin was more expensive in some Tether pairs in 2019 or so. So we've definitely had even worse like Tether FUD before.
Absolutely.
I would be lying if I said that.
I didn't formulate that well. I should clarify it. There is definitely a huge risk in any of the stable coins. There is no doubt about it. And in any crypto, and definitely in all the stable coins, we have no idea really what's going on. And if history has shown us anything, it's very difficult to see from the outside what's actually happening in the inside. Maybe they lost all the money gambling already. We wouldn't know. So I would just want to clarify that. There's definitely a risk. And I think that there is risk in crypto. It's not like an index fund. It's not like saving for pension in a stable situation. It's not the mode we're in. There is high risk in crypto, and that means we need to have high return also. That was really a wake-up call, actually. When was it? 6 months ago, when first USDT depegged, and then you moved money to USDC, and then USDC depegged because they almost lost money in the Silicon Valley Bank, and then back to Tether. And you really reminded that there is no such thing as a safe haven in any of these coins. So the risk is there. That means that the return has to be there. And I actually increased my risk willingness after that incident. I really felt that I have to aim higher here. We're here to get the 10x return, 100x return, and so on. We're not here to make 5% like an index fund, because the risk is bigger than that.
Absolutely. Guys, on that note, let's wrap it up. We're 11 minutes past time. So everyone who's watched, big shout out to you. Thanks a lot. Smash up the like, subscribe. Go to CTO Larson right now. Click subscribe. Go to Invest Answers James right now. Click subscribe. Was fantastic time together. Next week, where are we next week? Is it CTO or James?
I don't remember.
I can't remember. I think it's mine probably. We were on James. We were on yours last week, I think.
I think was I traveling and sweating with some type of weird
Exactly.
virus?
So it's my channel next week. Yeah.
But it didn't stop me. Nothing will stop us from being here on Mondays. Nothing. So thank you all, everybody. See you guys.
Thanks, guys. So go subscribe to both CTO and James as we switch channels every week for this Monday stream. Okay, guys. Goodbye. Goodbye.
Take care. Bye.